the last basically 2 to 3 years, the credit report costs have been going up multiple times to the level we're at now. And so what's going on here is a couple things. There's a war going on. The provider of mortgage credit scoring has been FICO. We have all heard that acronym, FICO, Fair Isaac and Company. And so what's been happening is there's a kind of finger pointing going on between FICO and the 3 major credit bureaus, Experian, TransUnion, Equifax. FICO is pointing their fingers at the bureaus, suggesting that they're not being fully transparent. They've argued that, for example, on this average joint credit report cost of $120, that their royalty fee that they charge, this would be to the bureaus, is $4.95 per bureau. That means on a 3 bureau report, their royalty charge is about $14.85. So they're pointing their finger at the 3 bureaus saying, why don't you disclose why it's $120 when our royalty fee for that report that's being purchased and distributed to the borrowers, to us lenders, to put in their loan files, why is it $120? There's a big gap there, right? $14.85 versus $120. So FICO is pointing their fingers at the credit bureau saying, you need to disclose and be fully transparent. Where is that difference going? Of course, the FICO is suspecting that the bureaus are pocketing that money. Now, the other side of this debate is the 3 bureaus just came out with their own scoring models. It's called Advantage 4.0. And again, this is a new scoring approach developed by the 3 bureaus. And the Federal Housing Finance Agency that oversees Fannie Mae and Freddie Mac have approved the use of the Advantage 4.0 scoring model to be used instead of FICO. And they argue that the bureaus do that this is a better scoring model and it will be less expensive to the borrowers than our current system. But the problem is there's a real roaring debate going on here between the 2 parties, the 3 bureaus and the FICO, the Fair Isaac Company, as to what's going on here, what's justified in terms of costs and so forth. So from that perspective, we as mortgage originators, all of you as borrowers, those of you who already got your loan, you're good. You don't have to be exposed to this. But anybody looking to get pre-qualified to buy a home, or if you're looking to do a refi, you're going to be faced with these much, much higher costs. And it's put us into a little bit of a dilemma as a mortgage originator in terms of when we get inquiries to pre-qualify borrowers, in particular when they're looking to buy a home. In past years, when it was $30, in fact, I can remember when it was even half of that, like $18, $20, we would get a request for a mortgage pre-qualification.